Hey, what's going on, y'all? I hope y'all are having a wonderful day. Hope everything's going well for y'all. Um, this video I wanted to make because I've been getting a lot of responses. I've been getting a lot of emails about, different topics on how to build credit. And I just wanted to make a video, a step-by-step video on how to build credit. All right, so this video may be a little bit longer than any other video that I made previously, so bear with me, because some of it is going to be a little bit about my theory. You see, one thing I do want to address is that I've been getting some pushback from my Lexington law firm review that I did, and the thing with that video where people are missing the point, right? And I just want to make a point that when you sign up for a credit repair company, right? When you sign up for a credit repair company, yes, they should help you build credit. That's just my personal opinion. They should help you build credit. They should help you establish credit. They should help you step by step look at everybody's situation differently and not just some cookie cutter type situation, right? So that's my theory, right? You may have a theory of, well, Lexington is great because they just delete items off your credit report. Good for you, good for you. But I'll bring this analogy up. Let's say we're trying to lose weight, right? Let's say we're trying to go on a diet, and I give you this magic pill, and I say, hey, look, I need you to take this magic pill, but you take this magic pill, and the only way this magic pill is going to help you lose weight is if you don't eat meat, right? You stop eating meat, you cut down your carbs, and I come up with all these different things the way that you eat. And I say, this is the way you have to eat. And, 3-4 months go down the road and you find out you lost 10 pounds. And you go, wow, this pill is really working. And I come to you and I tell you, hey, look, it wasn't the pill. There was actually nothing in the pill, right? The magic was your eating. The magic was what you were doing. So did the pill actually help you? Technically, no, it didn't help you. Did it give you a motivation to keep going every day, eating right? And if that's the case, then you got to say that it's worth it. That it's something that you can contribute to you being successful in losing weight. And I apologize for that. But the reality of the situation is, Lexington, I believe one thing that everybody's missing the point is the deletion of letters is not what's helping you build credit. Deleting letters will never help you build credit. And so this video is a step-by-step guide on what you need to do, the steps you need to take on building credit. All right? Before you even start getting to deleting items off your credit report, this is what you need to do. You should have 2 to 3, preferably 3 credit cards, right? That's the very first thing you work on. 2 to 3 credit cards, right? And if you don't have 2 to 3 credit cards and you got to say, okay, I have to save my money, the $1,000 that it's going to take to get these 3 credit cards. You establish a budget, right? The very first thing you do, if you do not have credit cards, you don't have anything. If you don't have anything, you're starting out from scratch. The very first thing you do There's an app. It's called EveryDollar. I'm not affiliated with this app. I don't get a commission from this app. This app is through Dave Ramsey. All right. Now, what this app does is it helps you get all your expenses in order and get a plan on how to pay off your debt and create a savings plan, right? Because the reality of the situation is you got to come up with $1,000 to get started, right? That's before any credit repair, before any deletion of letters. You have to establish a budget, right? If you say, okay, I'm going to pay Lexington $129 a month to delete items off my credit report, and you're still late on your bills, that's not going to help you, right? And these are the things that are missing with the consultation with the client. There is no true consultation, right? If you don't have a budget in order, there is no way for Lexington to know what they're going to do is going to work. So in order for Lexington to know this, that they can provide the best service possible, they have to make sure that you have a budget in order and understand, okay, for the next 12 to 24 months, you have to pay all your bills on time. Do you have a budget? If you say no, they should guide you in the direction of putting your budget together, right? I'm not saying do a financial needs analysis on you or anything like that, but they should have at the bare minimum something in order to figure out your expenses and your income and figure out how much you can stack away each month in order to get started, right? Because the worst thing you want to do is go through credit repair 1 month, you stop the program, 2 months later you pick it up because you got your finances together, 3 months later something happens. So the reality of the situation is, get your budget together first, right? Save up $1,000, right? Save up $1,000 and go get 3 secure credit cards. Get your budget first, right? Get your budget. EveryDollar is the best app out there as far as budgeting is concerned. This app is, I believe it's $99. If you guys go look at this app, I'm going to provide a link. If you look at this app, I'm a huge believer in this app. It's changed my financial situation drastically. Like, I can't even get you to understand how important it is for you to at least have some way to track your spending habits, to find out where you're spending money, right? Once you do that and you get your 3 secure credit cards, what those 3 secure credit cards are revolving lines of credit. All right, now you're getting into building credit. When you look at the algorithm for FICO or the algorithm for Vantage scores, that model is heavily weighted towards credit cards. Like, how do you handle credit cards? If you do not have credit cards, that's counted against you, right? The more credit cards you have, the more weight it's going to be in your favor, right? So the magic number is 3 to 5 credit cards that you would like, but we're just talking about starting out, right? So if you could just get 2 to 3 credit cards, a revolving line of credit is anything where your payment fluctuates every month, right? So let's say you have 1 month, your payment might be $35. You pay that off, that $35 that you paid off is now available to you, right? And so the next month, because you paid that $35 off, you may not have a payment. That is considered a revolving line of credit. If your payment is fluctuating, then they consider that a revolving line of credit. Credit cards, lines of credit, gas cards, if you have like a merchant card from like a Best Buy or a Walmart or whatever it is, a merchant card, something like that, American Express, all those are considered revolving lines of credit. All right. Now, on that flip side, when you have, the payment that stays the same every month, it doesn't fluctuate. It's called an installment loan, right? Like a mortgage is an installment loan. A vehicle is an installment loan. The payment doesn't fluctuate. It stays the same every month. And when you pay that off, you don't get any balance in your favor. Like when I said you pay the $35 off on the revolving line of credit, and that $35 available for you to use again on an installment loan like a house or a car. Once you pay that off, that note, you don't get that available. You're just paying off a loan. Once that balance goes to zero, you're done. You don't have no more contract, or you're not no more responsibility or obligation to that institution that you have that loan with anymore. You guys are now divorced. You don't have to basically deal with them anymore. On a revolving line of credit, when your balance goes to zero, you still have a relationship with that lender, right? So that's the difference. Revolving lines of credit weighs more on your credit score than an installment loan. That's why I always tell people, you see, you want to start your credit building as soon as possible, right? Once you get in your mindset and you say, hey, look, I want to start building credit. The reason why I say start with credit cards is because, one, automatically when you start seeing your credit scores goes up, it's going to motivate you. You're going to start feeling good about, the process. You're going to say, okay, I see my scores going up, and you're going to see the jumps that you have in your credit score. Might be 20 points, might be 30 points, but you're going to see it automatically. And like I said, if you don't have any credit cards or anything like that, and you're hovering around 400, 500, you're going to see jumps really quick. It's like I always tell people, it's easier to jump from 400 to 600 than it is from 600 to 700, right? So the reality of it is you have to get started as soon as possible, right? So the best way to get started building credit is with credit cards. Now, if you can't get approved, like let's say you have a 400 FICO score, right? Your FICO score is really low. You have collections. You don't have any credit cards, and you're trying to figure out, how do I get started building credit? The best way for you to get started is to go out and get secure credit cards and make sure they report to all 3 credit bureaus, right? Make sure they report to all 3 credit bureaus, and then once they start reporting, you're going to see your scores jump. Now, let's say you only have $300 right now. Go out and get one secure credit card that reports to all 3 credit bureaus. What I'm going to do is I'm going to provide a link. If you're watching this video and you go into the description of this video, I'm going to provide a link of 3 to 5 credit cards, secure credit cards, that I believe will help you build credit. They're going to be a high interest, probably somewhere about 22 to 24%. But what it's going to do, it's going to allow you to build credit. Now, when you get these credit cards, if you get a $300 line of credit, you cannot spend over 10% of your line, right? You got to promise me when you get these cards, you don't spend any more than 10% on your credit card and you pay it off. That's very, very important. All right, how you use your credit cards is really important. Don't just go out and get credit cards and just start using them, maxing them out and everything. There is something called the utilization rate. Okay, now your utilization rate is basically how much do you use every month on your credit card. So if you got a $300 credit card and you use 50% of it, you're gonna have a 50% utilization rate, right? And the more you spend, the higher that utilization rate is going to go, and the lower your FICO score is going to be. So the lower the threshold, once you start getting above 10%, it starts affecting you drastically. So those of you who are out there that go, but I already have four credit cards, why is my FICO score so high, so low? You could have 4 credit cards, but if you're not using your credit cards properly, meaning a very low utilization rate, then your credit score could be really low because your utilization rate might be too high, right? So make sure you're doing your credit and using your credit the right way, right? Don't max out your credit cards, because the algorithm wants to know what is the likelihood of you becoming 30 to 60 to 90 days late in the next 24 months. And if you have a large amount of money on your credit cards, the less likely you're going to be late on a bill, because you can always pay your credit card. You can always use your credit card. But if you're maxed out on your credit card, if something happens, like they always say, it happens. When something happens, you don't have any sources to go to get capital. You don't have nowhere to go to get capital. So that's why the utilization rate is really key. So just because you have credit cards, right, doesn't mean, all right, now I'm going to go start, getting items deleted off my credit report. No, all that money that you were going to give to get items deleted, use that to pay down your credit cards. You're going to have a higher jump in your FICO score if you use the money that you were going to use for credit repair and pay down your credit cards. See, these are the things that nobody's talking about. If they don't talk to you about your credit report and they don't find out what's in your credit report, how are they supposed to know if their service is even going to work for you or not? Because if they delete a whole bunch of items off your credit report and you still have a high utilization rate on your credit cards, your credit score is still going to be, less than desirable from institutions, and you could still get possibly denied. So all that money you threw at credit repair was all for naught, right? So what I like to tell people, make sure you take the proper steps in building credit. So where we are right now is we have 2 to 3 credit cards, whether they're unsecured or secured. Now, an unsecured credit card means that you didn't have to put any money up front. A bank said, hey, look, your credit's good enough. You applied for a credit card. We're going to give you, $1,500 to $2,500 credit line. And you're able to use that credit card at any store, Visa, MasterCard, whatever it is that you like, right? So you get 2 to 3 of those, right? If you can't qualify for the unsecured, get a secured credit card, right? Because your credit score might not be good enough. So once you have 2 to 3 credit cards, secured or unsecured credit cards, that takes care of your revolving line of credit. What you want to do is you want to establish yourself with a loan. You want to go out and get a loan. Now, it doesn't have to be a car, doesn't have to be a mortgage. If you're in the process of getting one of those things, okay, go ahead. The reason why I say SelfLender is because a lot of people aren't in the market for getting a car right now, right? If you're like shopping for a car and you're like, you know what, I really need a car, and you can find a dealership that has challenged credit situations where they sell cars to people that have, you know, some blemishes on their credit report, and you could get them to finance you. Your interest rate may be high, but it's going to help you in the long run because you're trying to build a solid credit profile, right? And you're trying to show you're responsible with money and you're able to pay all your bills on time, right? And that's what you're trying to show. If you're not in the market to get a car, go to your bank and you can get a CD, right? Get a CD, a certificate of deposit, and put $1,000 in a CD. Ask the bank if you can use that $1,000 as collateral for a loan. If you ever, you know, renege on paying them, then they can take your collateral. But chances are they will do that. Like if you go to a credit union or something like that, the bigger banks, they may not do that. Like the Chases, the Wells Fargo, you know, the bigger banks, they may not. But if you go to your local credit union or your local bank, and you let them know, hey, look, I'm just trying to establish my credit, build my credit up. Will you guys take this money, put it on certificate of deposit, and give me a line of credit? And chances are, not a line of credit, but a loan. Chances are they'll do it. So you do that first. The very next thing is if you don't want to do that, let's say you don't have the $1,000, you used your $1,000 for your 3 credit cards. You got 300 credit cards. What you want to do is go to a company. It's called SelfLender. SelfLender is a company that will give you an installment loan, right? They'll give you an installment loan and you just pay every month. Although in that situation, you never receive money. You're just paying for your building credit through paying them for a loan that you get in the future, basically. Your CD is put in a bank, you're paying that off, and in the future you get it. I made a video, it's called SelfLender Review. If you get a chance, if you're not understanding what I'm saying, go look at that review. It's on SelfLender, and it takes you through the process of how to sign up with SelfLender and all that. But now you understand the difference between a revolving line of credit and an installment loan. And that's huge. Right? You don't want to go get an installment loan before you got your revolving lines of credit. And you don't want to do credit repair before you got your budget. You got to make sure you got everything in line so that when you go to the credit repair company, you're already building credit, right? Credit repair is an enhancer. It's not a remedy, right? It's not going to fix anything. The only way you can build credit is if you build credit. Only way you can build credit is if you build credit. You're not going to build credit by deleting credit. That's not the way it works. That the algorithm doesn't work that way. And anybody that says otherwise, they just don't understand the system. They don't understand how a FICO score is derived. A FICO score is not derived behind collections, right? If they say your FICO score is all about collections, then they're missing probably 60% of the algorithm. 65% of the algorithm is how you deal with credit cards, period. And that's the missing piece. They got to give you the full story. Only way you're going to get the full story is if they sit you down, they look at your situation specifically, your credit report, and say, This is the plan of attack for your situation. Maybe you have 4 credit cards and you need an installment loan. Maybe you only have 1 credit card, but you need some more credit. Work on building credit before you work on deleting credit, right? And that's just my thing. I wish more credit repair companies will talk about building credit, right? Because I know in my specific situation, deleting credit, it makes you look good for underwriters. That's the best that I can tell you. If you don't have any credit, though, it doesn't help you at all, really. It might help you a little bit, but from all my experiences, all the help that I've given people, and all the credit reports that I've looked at, all the people that I've helped, majority of the time, it's lack of credit. It's not the collection that you had in 1922 or whenever you had it. You know, like you see some collections on there, you know, that should be off the credit report because they're old, but they'll still be on the credit report. Yeah, you can take that off, but really that has not that much weight on you. You don't have any credit. And that's the problem that we're in today. Get credit. Get credit. Don't worry about deleting items and all that other hocus pocus stuff right now. Don't worry about all that stuff. They're trying to talk you into taking money out of your financial system, and your financial system is your home. They're trying to get money out of your financial system and put it into their financial system. And that's all they're doing. So they don't teach you about credit, so you don't really know. And everybody that says Lexington worked for them, they were in specific situations where it did work for them. If I go and I try and apply for a car, and the financial institution said, "Hey, look, what is this collection that you got on your credit report?" And I said, "Well, you know, I had a light bill that I never paid." And they told me, "Okay, in order for us to get you financed, we need to get this taken off your credit report." Okay, great. Credit repair, a credit deletion company would be great for you in that situation. But, you know, I'm in 400s, and I've been in 400s all my life. I never really looked at my credit score, or I want to buy a house in 2 years, and I want to build my credit up, and I want to qualify for the best interest rate that they have, so I know I got to get to the 740 range. Deleting items off your credit report is not gonna work for you if you've never had credit. You're not gonna have a 700 FICO score if you don't have credit. Okay? If you don't have any credit, you're not gonna have a 700 FICO score. You can have collections with a 700 FICO score. So how does that figure? How does that work? And that's because majority of the FICO score is derived behind how you deal with revolving lines of credit. Get your revolving lines of your credit in order first. Get your installment loan, and then you start working on getting items deleted. But you don't work on deleting items and all that other stuff. And I don't know why anyone will pass that on to somebody else if they have the time to do it. Like, if you're trying to learn how to do it, like, you need to learn how the credit system works. Getting a response from a credit bureau will help you far greater than you just passing it off to somebody else and say, "Hey man, get this stuff deleted." I just think that you will be better off doing it yourself. I send letters. I have letters. If you guys want to do letters and stuff like that, then I say do that. Don't worry about, you know, these credit repair companies that want to take your money from you and put you in a situation where you're beholden to them. you know, hoping that they get you qualified, because you're just not going to get qualified. If you know, those that out there that did get qualified through deletion of credit, you were in a very specific situation and you're not telling the whole truth, period. Or you work for that credit repair company and you're making a video for that credit repair company, because it just doesn't work that way, right? It just doesn't work that way. I don't know how to put it any other way. So I wanted to make this video because I want to be specifically clear that I do believe in credit repair, right? I do believe in credit repair, but just not the way that they make it out to be, where you're going to take your hard-earned money and put it in a situation where you're going to get a 700 FICO score by deleting credit items off your credit report, because it's just not going to happen. The interesting thing is, if you guys been watching this channel and watching my videos, you guys know that I wrote a book. It's called Credit Anatomy, and you can I'll have a link for this book, and you can download that book. It's free. I don't charge anyone anything for the book. I want to tell you guys a quick story, and I know I'm running long on this video, but so when I first started out, right, with this credit repair industry, how it all started was I wanted to build my credit up, and there wasn't a lot of information out there. And so there was a lot of people willing to take my money but not teach me. And so I said, I'm gonna build a credit repair company that is more concentrated on helping people build credit rather than deleting items. You know, wasn't really thinking about a business model, wasn't really thinking about you know, monetizing my platforms and blogging and all this other stuff. My main focus was I really wanted to get the information that I learned into other people's hands. And so, you know, I started, you know, buying these little templates, and, you know, I bought these email responders, and I started doing all these little things that I could to get all this information in people's hands. So if you go to creditliving.com, you will see that I have a website up, and it's a credit repair website. It's not active. I mean, it's active on the internet, but it's not a business that I actively pursue. I have the title Credit Living because, like I said, at one point in time, I was going to build a credit repair company, and I still may. You know, I'm still in the process of building it out, but it's not in a sense like I want it to be about deleting items off of credit report. I want it to be about building credit and helping people establish credit in a community of people where people come together and we share different ideas on building credit. Like if you have a credit question, I want there to be a platform where people can go, like a forum, like a Credit Karma or MyFICO or something like that, where people can go and have these conversations more along the lines of building credit rather than, you know, what's your FICO score. There is a huge market or a huge demographic of people that are less banked. They're less financially sound, that I'm trying to reach. And if you go to the Credit Living website, you will see that there's a website up, but like I said, it's not active. If you download my book, it's trademarked through Credit Living. If you get my emails, you'll see that, you know, Kenny from Credit Living. And I'm only putting this out there so that you guys aren't confused on what I'm doing. Yes, the website is up. Credit Living is up. However, don't pay attention to the website. I had somebody, and maybe this is why I'm bringing this up, because I had somebody reach out to me, and I don't know if it was a true person or not, but I believe they had an agenda, and their agenda was maybe, and this is the feeling I got. I don't want to say that it is, but this is the feeling I got. They were trying to say that I was like every other credit repair company. One, I'm not a credit repair company. I don't accept any money from anybody. Two, if I did have a credit repair company, and I know it doesn't say this on Credit Living, but if I did establish a credit repair company, it wouldn't be for the outlandish prices that these credit repair companies charge today. You know, $129 a month for a service that you don't use every month. That's another video. Is completely out of the question, right? Let's go into it. And I'm gonna get a lot of flack if you guys, if you guys don't, you're not really feeling this material. Don't, you change the channel, go to something else. But I'm gonna drop something right now, and I hope you guys. This one's gonna get me in trouble, but let's do it. So here's the business model why all these credit repair companies make so much money. This is gonna be a long video, but I hope you stick with me, because this right here, what I'm about to tell you, is gonna shock you. If you're a credit repair company, all right, imagine this: you're a credit repair company. Majority of the credit repair companies out there don't do their own credit repair. Majority of credit repair companies out there, I would probably say 98% of them, they're not the ones that are actually sending letters to people telling them, hey, delete this off the credit report, delete that off the credit report. They outsource it to another company, right? So what they are doing is they go to you and they say, hey, look, if you pay us $100 a month, we will dispute the items on your credit report. So you pay them $100 a month. Now I want you to stick with me here. You pay them $100 a month, and they are going to delete items off your credit report. What happens is, usually, right, and here's where I'm going to get in trouble. Usually, they pay a flat service fee, depending on, what service they have with the outsourcing company, as low as $200 a month, plus $35 per letter that is sent, right? Or disputing round is what they call them. So I pay $200 a month, right? Let's say, I'm a credit repair company. I pay $200 a month, and I have 10 clients, or 100 clients giving me, $100 every month, right? That's $10,000. $10,000 every month off 100 clients. Is that right? Let's do the math on it. That's $10,000. $10,000 every month they collect. That's just off 100 clients. Now here's the genius behind it. It gets worse. So a disputing round. Let's say I have 100 clients. So I spent the 200 plus the 35 times 100. That's $3,700 that I would end up paying to the outsource company. The rest of it I keep. So that's $3,700. So 10,000 minus 3,700. I just made $6,300 that that month off of 100 people. I made $6,300 off of 100 people. And that's only off $100 a month. You have Lexington Law, you have a lot of these other companies that are having people spend $100 a month or whatever. Stick with me for a second. So here's where it gets kind of shady. You go to the credit repair company and you're spending $100 a month. They tell you, okay, we're going to send out letters. It takes about 45 days for you. Every 45 days they send letters. Every 45 days they send letters. Usually it's like every 50 days. That means every other month you're paying for a month every other month for free. You're not getting no service. I don't know if I'm explaining this right, how I can explain. Every other month, your money, that $100 goes to the person that signed you up, right? So it's not like, imagine this. You need an oil change on your car. You pay when you go get your oil change, right? If I tell you, let's say your oil change is $35. Well, let's just be reasonable. Let's say you're on your car, your oil change is $35. But I'm going to charge you every month. I'm going to charge you $35 every month. But you only get 4 oil changes a year. Why am I going to give you $35 a month if I'm not getting a service every month? See, these little things are the things that people miss. Now, what I'm about to tell you, I don't think is out of the question for me to say. But anybody that stuck it out this long, if you sign up with Lexington Law Firm, and I'm just using them, they have contracts with the bureaus that says we won't dispute every month. Like, for example, I believe Experian, they dispute every 60 days. That means 1 month, they sent a letter. 60 days out, there's not another letter sent. So what service are they providing me for that month that I'm paying? I pay for my oil change. What am I getting for it? Nothing? I don't get anything for it? And all these people that are telling me, oh, Lexington, help me. Yeah, but at what cost? You're paying for a service that you're not even, I don't know how to explain it to you. It's such, I don't want to say a racket because it's legal, but it just rubs me the wrong way. I started the website Credit Living. I went to a company called Dispute Suite. Dispute Suite is one of the largest credit outsourcing companies out there. Probably the #1 rated credit outsourcing company out there. There's also another company called Score Inc. Mark Claiborne, who wrote a credit repair book. He has an outsourcing company, I believe, that helps you outsource, that outsources credit repair for credit repair companies. I'm not talking about individuals. I'm talking about people who have like 10,000 clients, 15,000 clients, 20,000 clients every month, right? The people that have these companies, they're not the ones that are actually disputing with the credit bureaus. They actually pay a service like Score Inc., Dispute Suite, or Mark Claiborne's company. And I apologize if I can't remember his company name. He gives out a lot of knowledge also. I actually got to speak with him one time. Like, he gives out a lot of knowledge on credit repair. he doesn't get enough credit. Mark Claiborne, if you guys get a chance, Google him. It's a brother, and he does a lot to help people build credit. And but the reality of the situation is a lot of these credit repair companies, these little mom and pops, and some of even the larger ones, right? Matter of fact, one that I know for a fact that's really large, I'm not going to throw them under the bus. They're not even the ones that do the disputes. They hire an outsource company. Like the outsource company, I believe Dispute Suite is out of Florida. I believe Score Inc. is out of Florida. I'm not saying it's an outsourced company like in, Cambodia somewhere, or China, or India. I'm just saying it's an outsourced company that has nothing to do with the company that they dispute, right? So you might be logging into a back-end portal, but you're actually logging in the portal for the outsourced company, and you upload your credit reports, you upload your all your information, and that's their back-end portal, right? So the reality of it is, these credit repair, there's so much money in credit repair because it's a service that's never going anywhere, right? You want to build wealth. I don't know a service that you can build faster than credit repair. Now, don't get me wrong, there's a lot of rules and regulations, but starting a credit repair company and getting people to give you money, it's not that hard because we all yearn for better credit. We all want to learn and be able to qualify for cars at the best interest rates. We don't want, to get a 1926 Honda Accord, you know what I'm saying, an old Honda Accord, and our car note $700. It's just because our we don't that's what we qualify for, or we got to pay cash for a bucket or something like that. We want nice things, we just don't know how to get it, and it's at their best interest to keep us in a situation where we don't know any better, right? So it's in their best interest. I mean, if you really think about it, why would they educate you on getting a better interest rate? Why would they? They're not going to. You got these credit card companies that say, hey, look, if you sign up with our credit card, you get a credit, you can monitor your credit. Yeah, but do you tell them don't use more than 10% of your credit card? They're like, nah, man, use as much as you can and pay that interest rate. Matter of fact, we even love you if you're late. You know why? We're not really worried about your credit report, but we get to charge you a late fee. That's just extra money they get. And when you have bad credit, you're at the mercy of everybody else, right? And that's the movement that I'm trying to establish, is getting people to understand how the system works. As you guys see, I'm a truck driver. I'm a real dude. Day to day, I work every day, go to work just like you do. I don't do this credit repair to make money. I don't even have enough subscribers or enough watch view hours to monetize my channel. So it's not about the money. If you go on Credit Living, it's not about the website. It's not about the book. I don't care if you download my book or not. I do this to help you, put you in a better situation, right? So that you can sit down with banks and get the best interest rate that you can on whatever it is that you're trying to get. I do believe in Dave Ramsey, but I just don't know very many people who could just go through life, cash everything, cash rich. You're gonna have to finance at some point. Heck, even your insurance is derived behind your credit report. So the higher your FICO score, the less your insurance is gonna be. If you're really about saving money, how about just have a good FICO score to save money on insurance? So, needless to say, I hope You know, you guys take all this information in. I'm gonna send the links for the 3 to 5 credit cards. If you guys don't have 3 to 5 credit cards right now, go ahead in the description, check it out. Check out the 3 to 5 credit cards. Look at the interest rate. Find the one that best suits you. These credit cards that I put up, they all report to the 3 credit bureaus. Start out, get your budget, get your credit cards, get your installment loan, and it takes time. It's not an overnight process. It takes time. Now, there are going to be people out there that say, oh, I went from 500 to 760 days. Good for you. You know, I don't know what you're smoking or what you did or who you robbed. I don't teach none of that. You know, there's ways to do things, and there's ways to get caught up in a whole bunch of BS, right? CPN numbers and authorized user accounts and all this other stuff. Become your own person, right? If you got somebody say, oh, I bumped my credit score up to 700 using authorized user accounts. If you go to any seasoned authorized user account holder, like if you go to any company, right? And they're good at their job. They know what they're doing, right? And they say, yeah, we can get you authorized users. Ask them one specific question. How long will this stay on my credit report? They're going to tell you, we guarantee such and such days, such and such months. We guarantee you it'll be on your credit report for 60 days. Or they'll say, we'll guarantee 90 days. It's no guarantee it's going to stay on your credit report. Why do you want to start all these things unless you're trying to get a car right now? If you're trying to get a car, authorized user accounts are a great way to boost your credit score up so you can qualify right now. But if you're not trying to qualify for anything right now, the best thing you can do is establish credit, build solid credit, your credit, not nobody else's credit, not going out asking your auntie to be an authorized user on her account, not asking your sister to be an authorized user on her account, or your brother. Or you build your own credit. That way, nobody can take that from you, right? Nobody can say, well, I'm going to take this. I'm going to take you off my credit card. Let's just stick to the basics. Let's take, 18 to 24 months. 24 months, build us a solid credit profile. It's going to take time, right? But once you get the time in, once you start building credit, like, I had a young lady that said, I got 4 credit cards, I got an installment loan, I'm sitting at 650. What do I do now? I said, well, do you got any collection items? No, I just started. I said, well, it's going to take time. It's going to take time. Don't rush. Don't rush the process. You just started it. Let's at least give it 6 months, but don't expect that it's going to be an overnight process. Anything that's overnight, it goes that fast. It goes as quick as it can. So, take the time and build proper credit. Don't worry about it. And trust me, 18 to 24 months is going to go by so fast that you're not going to even think about it. And then if you just do it the right way, right? Do it the right way. 18, 24 months from now, when you try to go get that car and they look you in the eye and they tell you, wow, I've never seen anybody with a credit report like yours. Or, yeah, what was it that you're looking for? You basically qualify for any car on the lot. Or, you're looking at your mortgage broker and they're telling you, yeah, you qualify. Now all you got to come up with is your down payment. And you what interest rate do I qualify? Oh, you qualify for our best rate. When you start hearing those things, that's when you're like, okay, I'm on the right track, right? You're not going to get that with deleting items off your credit report. Hey, you know what? Thank you guys for tuning in. Sorry this video ran so long, but I really wanted to get this information to you guys. I really wanted to not rebut, the video, the Lexington videos, or the pushback that I'm getting, but just give you guys the real deal. Let you guys know what's what, how to build credit in 18 to 24 months, 700 FICO score. Walk in to any financial institution and tell them, I want your best rates. You guys have a blessed day. I'm out of here. It's getting dark out here in Savannah, Georgia. Take care. Bye-bye.